everyone, and a very warm welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi. Well, we have a jam-packed show for you, so let's get on straight with it. First up, we'll be discussing some stocks on the show, and the first will be some mid-cap ideas as well as Andhra Bank. And in our portfolio segment, we'll be discussing the portfolio of Vicky Chen. Moving on, we'll also be discussing towards the end of the show, of course, some technical as well as fundamental ideas. So let's get on our guests on the show. First up, we have Vikas Sethi, the MD at Sethi Finmart, joins in, along with Swati Hotkar. She's the Technical Research Analyst at Nirmal Bank. Well, good morning to both of you and thanks for joining in. Now let's get on our query. Our first caller today is Santhanam from Bengaluru. Santhanam, what's your query?
My name is Santhanam. I'm a senior citizen from Bangalore. Please suggest which among the following three stocks I can buy current level. Rallis India, Federal Bank, V-Guard Industries. If the answer is none, I would request you to suggest a good mid-cap stock in any sector which I can buy on Monday for a time horizon of 1 to 1.5 years.
All right, Santhanam, we'll surely try to get your query answered then. Vikas, first over to you. You heard Mr. Santhanam's query. He's a retired citizen of India from Bengaluru, and he wants to know among Rallis India, Federal Bank as well as V-Guard Industries, what may he pick with a time horizon of approximately 1 to 1.5 years. What would you advise him?
Yeah, Mubina, the stocks which he has suggested, actually all the three stocks are fundamentally good companies, and he could even look at all three of them if he has investable funds. But if I were to choose one among them, I would like to go with the Federal Bank, because I feel the stock is trading at reasonable valuations, and I feel as far as the banking sector is concerned, the worst seems to be over, and Federal Bank remains one of the good bets among the private sector banks. And on Tuesday we have a credit policy from the RBI, and I am hopeful that this time the RBI might reduce interest rates, and which would be pretty big positive for the banking sector.
Okay, that's of course a call coming in. Federal Bank is Vikas's top pick, but of course if you do have adequate investable funds, you may actually look at picking up a stake in all of these three stocks, because all three of them do have strong fundamentals. But on the technicals, what looks attractive from either these three stocks or any other pocket in the mid-cap space? Swati, the question is over to you.
Yes, I would like to suggest two stock among whatever the mention we have seen the three stocks. My first buy call will be, I will giving on the Rallis India as such. If we check on a weekly chart, the stock is giving just a V-shaped recovery we have seen in the last 1 year, and it's on the verge of giving a breakout of 223, 225 odd levels, which indicates a very good signs. Even the volumes are little bit increasing on a daily basis, on the weekly basis. The momentum indicators average is also showing a positive indication. So at the current level, he should take a buy call at 223, 220 odd levels, maintain the downside strict stop loss of 200. I believe in the coming 1 or 1.5 year, the stock will like to reach 260 to 280 odd levels. My second buy call will on a Federal Bank. Federal Bank is just doing a double top levels as such, and it's on the verge of giving a breakout of 75, 76. Even on the daily chart, it's showing that as per the extension theory, it's on the verge of giving a breakout of 61.8, which is a Fibonacci golden ratio. So once it manages to give a breakout, then definitely upside rally will likely to become back towards 85 to 90 odd levels. So at the current level, I will suggest to give a buy call. Maintain the strict stop loss of a 60 on the downside, and you can carry your long positions for a year and a half for a target of 85 to 90.
All right, so two buy calls, Rallis India as well as Federal Bank, and those are the targets and stop losses that you must ensure you stick to while investing. Let's move on then, and our next caller for the day is TK Murugan from Tamil Nadu. Mr. TK, what's your query?
I'm TK Murugan from Salem, Tamil Nadu. I got Andhra Bank shares 100 for rupees 92. I want your suggestion. I can give you 6 months time horizon. What to do now? Tell me, sir.
All right, that's of course a query coming in on Andhra Bank. He has got a 6 months time horizon. Just to tell you a bit about Andhra Bank and what's really kept that stock active off late, at least in terms of news. Remember that the bank has entered into a new insurance pact wherein it has tied up with 2 insurance companies, Cigna TTK as well as Reliance Insurance, and this essentially will aid the bank to deal the company's products, and it does hope to tap the insurance market potential with this deal. Swati, over to you first. Then on the fundamentals, our caller does have a 6 to 8 month time horizon. So where do you think the stock can head?
See, on a technical background, if we look towards the last 2-year data, we have seen that this particular counter is continuously trading in a lower channel as such, or say in a downtrend as such. But it had just made a double bottom at the level of a 40-45 levels, and it just slowly and steadily just reversing back towards the upper level as such. I believe since he is having a long position at around 85-90 odd levels, at the current level he can at least average it out so that the buying rates will come down. And on the upside, as of now, currently it has a 60 levels, which is the strong resistance level. Unless and until it doesn't get a breakout of a 60, upside movement has been restricted. Once it manages to give a breakout of 60, I believe it will go up to 80 and 90 odd levels. So at the current level, I will suggest to at least do some average so that the buying level will come down, and upside, I believe it has a potential to reach up to 80-90 odd levels.
All right, you may buy in some of the stock to average out your cost price, but you can hold on, watch out for targets of 80 rupees and a stop loss at 62 rupees. Vikas, coming on the fundamentals for Andhra Bank, a PSU bank, and may not be having the most healthiest of asset qualities.
Yeah, as far as Andhra Bank is concerned, I would recommend a sell on this stock, and I would advise the investor to switch to a better quality bank from the PSU banking space like Punjab National Bank. I like PNB at these levels because I feel the worst is over and the stock looks headed higher. And then I feel another positive trigger would be in the form of the forthcoming PNB Housing Finance IPO, which should see tremendous response. And the impact of that would be positively seen on the stock of PNB. So even in the short term, the stock would do well. And from a long term point of view, I have a target of 185 rupees on the stock.
Okay, that's the call coming in from Vikas. While Swati was saying that you may hold on to Andhra Bank, Vikas is actually advising you to exit that stock and look at a better quality PSU bank like Punjab National Bank. So that's a call you need to take. Let's slip into a short break, but on the other side in our portfolio segment, we'll be discussing Vicky Jain's portfolio. So don't go anywhere. Thanks for staying on with us. This is Buy Now, Sell Now weekend, and time to get in our portfolio segment where we'll be discussing individual viewers' portfolio. So let's get on straight with it. Today we'll be discussing Vicky Jain's portfolio. He is 49 years of age and he is in the services occupation. He has a long-term time horizon of roughly about 2 to 6 years. Let's tell you what he has in his portfolio. First up, it's Axelia Kale, of 4,000 shares bought at a price point of 100 rupees. SQS BFSI, 15,000 shares bought at a price of 375 rupees. Then we have Chennai Petroleum, that is about 50,000 shares bought at 210 rupees. So a fairly large exposure over there, along with even DCM Limited. He's bought in 45,000 shares at 78 rupees, and so is the same with Polyplex. 275 rupees his buy price, and he's bought in 15,000 shares. Followed by Care Rating, 1,500 shares purchased at a price point of 1,200 rupees. AGC Network, 25,000 shares bought at 78 rupees. HPCL for 1,200 is his shares bought at a price of 400 rupees, and IOCL 1,000 shares bought at a price of 370 rupees. So it's fairly a mixed exposure over there, with most of his stocks being thinly traded and very, very small cap stocks, with HPCL being one exception, and even Chennai Petroleum being a fairly mid to large cap stock. Let's get in a perspective then on his portfolio. And Vikas, let's get in a check on the first 3 stocks in his portfolio. Axelia Kale, he's bought in that stock at about 100 rupees, and that stock's doing really well for itself right now. So he's clearly bought it a really long time ago. Similar as the momentum seen in SQS BFSI, he's really been able to double his money over there. However, Chennai Petroleum, he's bought it at 210 rupees, and currently it's at 287 rupees. So clearly he's been a very good stock picker when it comes to all of these small companies, and he's bought in them early. What's your call on these 3 stocks?
Yeah, Mobina, the stocks which is bought, they're all good quality stocks. First, I would like to congratulate him for buying into Axelia Kale at such lower levels, and more importantly, holding on to the stock and generating multi-bagger returns for himself. But I feel despite being in such a big profits, I would recommend that he should continue to hold on to Axelia Kale. It's a good quality stock, and I think we've seen significant correction in IT stocks, and now is the time for them to recover or resume their uptrend. So I'm bullish on this stock from the current levels, and I have a target of around 1600 rupees in a year's time, so he can continue to hold. The other stock which he is holding is SQS BFSI, again a good company into high growth areas within the IT space. So I like the stock, and he has bought it at good levels, and I feel we could see further upside from the current levels. So I would recommend a hold even on SQS BFSI. And the third stock which he owns is Chennai Petro. That stock also looks good. It trades at pretty reasonable valuations. Most of the refining or oil marketing companies are doing well. Chennai Petro would also continue to do well. And this being their 50th year, I see some kind of reward to shareholders in the form of bonus in the coming quarters. So I like this stock, and I have a target of 350 rupees on the stock in a year's time. So I would recommend a hold on the stock.
Okay, all 3 stocks are a hold recommendation from Vikas. Axelia Kale, where he's making money 16 times from his purchase price. SQS BFSI as well is one stock that he's been able to catch at the right time, and even Chennai Petroleum is a hold on the anticipation of any sort of bonus announcement that will be an upside trigger for the stock. Let's move on then and get in the next 3 stocks in his portfolio. First up, it's DCM Limited, just marginal money making over there, because as opposed to his buy price of 78, it's now currently at 81 rupees. Polyplex Corporation, another small stock, bought at 275 rupees, currently at 316 rupees. And Care Ratings is one stock he's bought in at 1200 rupees. Once again, he's clearly on the right side of all of these stocks. Vikas, come in. What would you like to comment on these 3 stocks?
Yeah, as far as DCM is concerned, I think this company has pretty weak fundamentals, and he's sitting on very small profits. I would recommend that he should book his profits and sell this stock and switch to a better company like an L&T Finance at the current levels, which is trading at around 90 odd levels. So I think he would do well to switch to L&T Finance, where I have a target of 125 rupees in a year. The other stock which he owns is a Polyplex. The sector looks good as far as the BOPP films and flex packaging industry is concerned. The sector looks pretty promising in view of the fact that we've had good monsoon, and FMCG companies are also likely to do well. But from the sector, I like a company by the name of Cosmo Films at the current level. So I would recommend a sell on this stock and a switch to Cosmo Films, where I have a target of 550 rupees. And the third stock was Care Rating, which is a pretty good stock. He has bought it at the right levels, and I think with the kind of asset quality concern which the banking sector has, these credit rating companies would continue to do well. And this company is also planning to launch operations in Nepal, which would also be pretty positive. So I would recommend a hold on Care Rating.
Okay, those are some chops and changes that you can consider for these 3 stocks. Buy in on L&T Finance instead of DCM Limited. Within the same space, you may actually exit Polyplex Corp and replace it with Cosmo Films, which is within the BOPP film space. And hold on to Care Ratings, as there are further positive triggers in terms of asset quality and even the fact that Care Ratings is planning to expand to Nepal. Let's move on and get in the next 3 stocks in his portfolio. First up, it's AGC Network, bought at a price of 78 rupees. This is a very thinly traded stocks, mind you, and the price hasn't really moved much from his buy price. HPCL, one large cap stock that he has in his portfolio, 400 rupees is the buy price, currently at 423 rupees, and IOC at 370 rupees, making some good amount of money over there. Vikas, what would you advise him?
As far as AGC Network is concerned, the company is pretty weak, and I would recommend a sell on the stock. And my advice would be to switch to a stock like an Syntex, the details of which I would discuss when I discuss the stock in the next segment. So I like Syntex, and I have a target of 125 rupees on Syntex, so I would recommend a buy on Syntex. The other two stocks like HPCL and IOC both come from the oil marketing or refining segment. I like both of them with the kind of say lower crude prices which we are witnessing, and the subsidy burden which is being taken away from kerosene by the government. So I feel oil marketing companies would continue to do well. So both the stocks I like, and I think you can continue to hold on to them.
Okay, that's of course Vikas's call. You may buy onto Syntex Industries instead of AGC Network, but you can hold on to HPCL and IOC. But remember, this portfolio recommended here is a model portfolio, and we recommend that you please do consult your individual investment advisor before taking any investment decisions. Let's take a break right here on the show, but more recommendations on technicals as well as fundamentals will come up for you after the break. Welcome back. Thanks for staying on with us. Let's get in a check on how did the markets perform last week. Well, it was mad with volatility and, of course, issues in relation to escalated geopolitical tensions between India and Pakistan that caused a severe cut coming on the Nifty. In fact, we were able to hold on to that 8600 mark with the skin of our teeth, with still slight recovery seen on Friday's session. As you can see on your screens, last week we lost about 2.5%, 220 points gone for the Nifty. Swati, come in on the kind of move we saw on the Nifty as well as the Sensex. Of course, we did have volatility at its peak as well. How do you think next week, and if in fact even the new series is expected to shape up?
Yes, you correctly pointed out that in the last week we have seen a major sell-off on the Nifty. I'd said last week we have seen almost 2.5% sell-off in the Nifty from 8800 marks towards 8550 on the background of geopolitical pressures as such. On the technical counter as such, Nifty is having a very strong support of 8500 mark on the downside levels. On the Friday we have seen that the Nifty somehow took a support of 8550 odd levels, and it managed to close about 8600 psychological mark, which indicates which gives a relief sign as of currently. But going forward, the selling pressure will likely to continue, which might take a Nifty back towards 8500 levels, which is the strong support level. So I will suggest, once if Nifty is coming down back towards 8500 odd levels, that that level should be act as a very strong support level, and one should take a buy call on a deeps towards 8500 levels. At the from the current level, it will face strong resistance of 8670 odd levels. Once it manages to give a breakout of that level only, and then we can see some upward rally back towards 8700, 8800 odd levels. So at the current level, stay lights on your position. If the Nifty is coming down towards 8500, definitely one should take a buy call. Maintain the 50 points downside stop loss, and one should track for a target of 8700 and 8800 on the upside as such.
Okay, those are some levels that you may monitor for the Nifty, especially in the week that's going to come ahead of us. But Swati, what are some top recommendations, and what are some stocks that look good on the charts?
Yes, today I would like to give a 2-buy call. First one is on HCL Tech and second one is a Marks and Pharma. Why I'm giving HCL Tech at the current levels, if we check our daily charts on a technical pattern, the stock was from the last few weeks, it was just consolidating within the range of 105 to 770 odd levels. On Friday, it has somehow managed to maintain give a breakout of 200-day moving average, which comes to at around 802 odd level, which indicates a very good sign, and the breakout has given along with the volumes. So at the current level, one should take a buy call. I believe it has a potential to reach up to 840 odd levels, and one should maintain the strict stop loss of a 770 on the downside. My second buy call is on a Marks and Pharma. If we check on a daily chart, we have seen that the Marks and Pharma has corrected from 112 levels to almost 30-40 odd levels on the downside. As of now, currently it is trading near to the oversold zone, and I believe it will just retrace its rally back towards at least 38.2 levels from its Fibonacci retracement level. So as of now, this particular counter is trading at 50-52 odd levels. It has given a trading range breakout of 50 odd levels with a very good volumes, which indicates the strength at the current level. So I believe once you take a buy call at 52 odd levels, I believe this stock will rally up to 65 to 70 odd levels, and downside one should maintain the strict stop loss of a 45 levels on the closing basis.
Okay, those are two buy calls coming in from Swati. The first one being Marks and Pharma. That is one stock as well that you must keep on your radar. But let's get in, Vikas, then to talk about some wealth creation ideas for somebody who has more of a long-term perspective. Vikas, what would you recommend?
Yeah, the first stock which I would like to recommend today would be Syntex Industries. This stock was in the limelight on Friday when the company announced the demerger of its prefab and custom molding segment. I feel this demerger would lead to significant value unlocking in the coming months or years. And as far as their performance is concerned, the company turned out pretty stable performance for the June quarter, where their net profits went up from 69 odd crores to 76 crores. And I feel this kind of performance would continue in the coming quarters. And this is mainly to do with the kind of good monsoon which we've had, which would lead to a recovery in the rural economy. And this is a pure play on recovery in rural economy. And to add to that, the recommendation of the 7th Pay Commission, then the passage of the GST bill also would be pretty positive for this company. And the company is also likely to be a major beneficiary of the government's thrust on low-cost housing, education, healthcare, and the Swachh Bharat Abhiyan. So I'm bullish on this stock, and as far as the valuations are concerned, the stock trades at just about 6.5 to 7 times its reported FY16 EPS. So I like the stock at the current levels, and I have a target of 125 rupees on the stock in about a year's time. And the second stock which I would like to recommend would be a stock which I've been recommending on your channel since quite long at pretty lower levels of around 180. The name of the company is Diwan Housing Finance. I like this company even after the run-up which we have seen, because it's a leading housing finance company which caters mainly to smaller towns and cities where demand is also good and competition is less. The company has shown pretty good performance over the past few quarters. It's also a play on the government's thrust on affordable and low-cost housing, and with the kind of rise in disposable income which is expected in the hands of the general public because of the good monsoon, because of the 7th Pay Commission, I think housing finance as a sector would continue to do well. And the best part is the valuations are also very attractive. If you compare it with its peers like a Repco Home Finance or an LIC Housing Finance or a HDFC, the stock trades at a pretty significant discount. It trades at just about 1.6 times its current book value, which is pretty attractive. So I like the stock even after the run-up. The stock has corrected over the last few days from the levels of 300, but at levels of 280, one should buy into the stock, and my target in a year's time would be 350 rupees on the stock.
Okay, those are some wealth creation ideas coming in from Vikas. It's Syntex Industries as well as DHFL. And mind you, despite the run-up we have seen, especially in DHFL, that is a buy recommendation coming in for the long term. Thanks so much, Swati, as well as Vikas, for joining in on Buy Now, Sell Now Weekend with your top technical views as well as your fundamental ideas. Well, with that, we're all out of time on this edition of the show. Thanks for watching and have a lovely weekend.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.